going to go higher, how many replications or standard deviations, this is the standard, and deviates higher, that would be 1, 2, 3, 4, 5, 6, 7.5, roughly. Okay. Why am I choosing 7.5? Because while watching price, when it was moving around, okay, we were entering this and measuring, okay, measuring the potential where price could reach for. When I was teaching the opening range gap, I told you that when we're in consolidations, when the market's likely just not to go anywhere in a hurry, what you can do is you can measure that opening range gap and get a measurement of 0.2, I'm sorry, 0.25 and 0.50. And what that is basically the same thing we do when we grade a PD array or a range or an inefficiency. Everything's graded because the market is algorithmic. I know it's probably something you never heard before, but the market is delivered algorithmically. And if it wasn't algorithmically delivered, you wouldn't see the technicals lining up with these little gradient levels, okay? Especially in ranges where the price has not been there before. It's never been in levels I'm going to show you here, okay? But you're going to see the effects of it behaving in a way where there's no other excuse for it. So let's just say, for the sake of this discussion, you don't believe that the market's algorithmic. You think it's buying and selling pressure. Okay, hold on to that thought. Let's delve into this. Price is moving higher. Okay, and now because I've started this whole business here at 10 o'clock, we done utilize the usefulness of marking 10 o'clock. So I'm going to take that vertical line off. Now imagine teaching this in book format. Think about it. Like I got to talk about all the things I said here, and that's a lot of typing. I had to talk about my son playing video games. I mean, it's going to be a whole lot of writing on my part. So you got to appreciate that effort, right? Can you tell I've missed you guys? Can you tell it? I think you can. So this price run here to there, okay? You can do a Fibonacci projection on that, and it'll get you somewhere up in this vicinity. Wonderful. In and of itself, by itself, it's great. But as price is meandering around, we're watching when price is entering the time at 11:30, because now it's time, as Michael Buffer would say. It's time. Wake up, boy. Don't be falling asleep on me. Okay. I've been staying up and this guy's yelling at me. This vertical line delineates when it's time to anticipate the setup. Why? Because we're entering the time window when it will likely form. Now, because it's 2 hours, it's 11:30 to 12:30. What do you think the setup's going to format in terms of time? It's going to be in the first hour, especially if it's been one-sided. Like all this movement here, one-sidedness. It just keeps getting pushed higher and higher and higher. All this buying pressure is overwhelming. So because it's gone higher, we limit our interest in this to the first hour of the lunch macro. Okay, well, let's go down here and add one more vertical line. Now it's getting too complicated now, right? It's too much. Can't handle it. So inside of the first hour of trading, between 11:30 and 12:30, during that first hour of the 2-hour lunch period that New York considers lunchtime, okay? If we see price when it enters here, what we'll do is we go through, and as soon as you get your opening range, you can rough eyeball it. Okay, what I do is I just take my thumb of my left hand, okay, and then and I'm going to try to describe this to you, but it probably won't be useful to you. But this is how I do it. Before I even pull the Fibonacci up, I hold my thumb out and I move it closer to the screen until it's just about the height of that opening range gap, or in this case, that box. So my left hand thumb, I'm pointing to the right. I'm holding my thumb tip out, and I'm measuring that to get a rough idea how tall that is. And then I'll just move it up above to the low of my thumb is resting right here. So now I know from here to here is one standard deviation. Okay, so that's one. And I just do the same thing all the way up, and I rough eyeball about anywhere between 6.5 to 7.5. So what I do is then I say, okay, well, I know it's entering the time here. So think like that multiplication table. What am I doing here? I'm going up. I'm going up the vertical axis. And then now, once I get up to the time, then I want to start moving over horizontally and it unlocks like the tumblers in a lock. Now watch what happens, folks. This is really fun. This is really fun. If I click on this, okay, and right in here, we'll just start with say you started and you wanted to see if it measures out to 6.5 standard deviations. Okay. Let me move this out of the way. Boom. Okay. Well, we went higher than that before 11:30. So it can't be this one. Okay. So you go up to 7. I know. I can't believe I'm giving this stuff away. This is ridiculous. I should be charging an arm and a leg. Here's 7 standard deviations. Okay. We're higher than that before 11:30 though. We're higher than that, Michael. It doesn't work. This stuff doesn't work. He's making it up. Watch. Point 0.5. Okay. Now, in and of itself, that's wonderful because we have it right before it and we have the standard deviation of 8 next. Watch what happens when we do 8. Bingo! How about it, baby? How about it? Where are those bodies at? Talk to me about not picking a daily high. Talk to me. Talk to me, baby. I'm doing it on purpose. I'm just tossing that in there. The three-letter guy's not here. I'm just having fun with you. So here's that turning point that happens to be randomly in the first hour of the 2-hour lunch period. Okay. Now, my focus here, do me a favor real quick. If you're paying attention, if you're awake right now, if you're following me and you're on X, take a second over there and on X and say something flattering to the algo, not to me, something flattering to the algo that you see this right here and it's just unbelievably precise. Think about that. Now tell me, is that not beautiful? It's beautiful, isn't it? It's beautiful. Now watch right there. Okay. Gotta start listening for the helicopters. He's finally releasing it. We got to get over there and stop him. Man, it's so fun. Right here, what I wanted to see is I wanted to see if it can pierce that. I was going to try to get that as it ran up there. And it was just staying right there with that one. So on this candlestick, oh, oops. Let me see. There's that. Sorry. So what I was waiting for is I want to see it pump up there on and that new candle, but it opened and only had a little bit of a wick there and didn't go higher than the previous one. Notice it did that, and then it sank down. When it dropped down in there, I already knew we're done. Why? Because of the time. I don't have much time before the close of that first hour. Because time's the most important thing. Why? Because algorithmically, the code, the sequence, the scripting of these markets, they follow a sequence. And everything's based on time, then price. Period. They're not going for your stop loss. They're going for everyone's stop loss. Everyone's stop loss. Everybody gets a stop loss run. Everybody. You get a stop loss out. You get a stop loss out. You get stopped out. You get stopped out. Everybody gets a stop out. Like Oprah Winfrey. Okay. But the wins aren't free. You're losing. So this opening price, I don't know where this stuff comes from, folks. I literally have no idea where it comes from. It's just it's a gift. Or is it a curse? Or is it a gift? Depends on who I'm talking to. The next candle I open up, and then now we're right there. That's my fill. What is that? What is that, ICT? Come on now. What is that? Well, I was looking at this right here. What is that? That's a buy sign imbalance, sell sign efficiency with a volume imbalance at the top. Listen to this guy. Word salad. He's making it up, guys. Don't believe anything I'm saying. He's making it up. This candlestick's high right there up to the low of the volume imbalance right there. Now, I already know about 85% of you are like, man, there ain't no way I'm doing all this to put a trade on. Okay. Do whatever you got to do. But I like to know what I need to know. I want to know why something's going to do something. I need to know when it's going to do something. Okay. And when I ask the Lord to show me things, well, look here, look there, look there, look there, look there. Okay. So, and if you ever study the Bible, and yes, I brought that up, God is a appointment setter. He's a date setter, and he's real good at keeping time. He actually is the author of it. So if I'm seeing elements of things repeating and culminating at specific times of the day, wouldn't it make sense for you to pay attention to these things on a repeated basis? I think it would. I'm encouraged. If you haven't never done it, I'm encouraging you to do that now. So when the price is going up like this, that's a bullish PD array if the market is bullish. But we're at the time of the day, first hour, that 2 hour lunch period, when it's all one sided, the lunch macro is going to kick in. Relative equal lows. I love it. I want some more of it. Right there is my fill at the upper portion of that inversion fair value gap. Well, how did you know it's going to be inversion fair value gap? Because it was immediately on the next candle, unwilling to go to the previous candle's high and take that out. And you have to be real quick. You got to be Johnny on the spot or miss it. So this candlestick, as it drops down, if I wouldn't have got filled there, the next candle when it opened up and it dropped up, well, dropped up. That's not something that, well, is it? Depends on where you're at in the world, right? It goes right to the consequent correction of that level. Look at that. Let me get out of the way. Look at that. This is what I find fascinating the most in trading. The fact that the buying gets done to such a degree of precision where they no longer are interested to buy anything higher than that level. And then obviously it's almost like an invitation goes out, RSVI or RSVP, hey, short sellers, sellers, come on in here at this price and just start running lower because nobody's interested in buying. Isn't that funny? That's funny, isn't it? It's so funny. Ah, belly girl. The market rose lower. I'm having fun. I don't care if you ain't. I'm having fun. As the market broke lower, started meandering around here. Then, only then, I kept the chart naked until we worked in this stuff here. And then I drew this out, which is another bullish PD array if price is bullish. But we went right on through it as we should have. Wonderful. The market goes in here. Where's it go to? Oh, it just creates a little run right up to the high of that. Where's the support and resistance in that, fellas? Where's that at? Where's the renamed and rebranded stuff that's called support and resistance right there? Where's that rebranded stuff? Find that right there in anybody else's stuff. Okay? Because I'm not bragging. I'm telling you that this came from the Lord. And I'm not letting you steal his glory because it's his, not mine. Period. The market then starts to fall off precipitously and attacks that low right there, which was my first target of a minor sell side liquidity. And you can see right there, as I highlight, look right here, you'll see the little exit right there. You see that? Boom, look at that. That's so cool. First partial. And then because I've mapped that out and these levels here, I drew the fib between that low and that low right there. And the 50% is this line right there. That's event horizon. So if you're going to look for taking profits, especially in a situation like this where I'm against the higher time frame order flow, it's a big, big bullish run. Most people would be scared. I ain't, because the worst thing that happens, I'm going to get stopped out like any other trade. But you have this myth in your head that getting stopped out at all-time highs is much more painful than any other short that you would take. Think about what you're doing. That's what you're doing. And experience teaches you that that's no longer a reasonable fear. I'm not saying you should go out and do it right now, but over time, what's going to happen is you're going to have the experience and the skill set, the prowess, the wherewithal, okay, the ability, the moxie, the intestinal fortitude. All right, get enough. You had enough. I promise you I don't drink caffeine, but I am hopped up on goofballs because I have missed talking to y'all, and I'm stretching this time out as far as I can until I see my wife come around the corner, and then we'll kill it. But it runs aggressively down through, and then we had this little area here I talked about. Well, not I didn't talk about it, but I drew this out, and I wanted to see it react off of that at a later time. But it took the profit below that. It took the profit at the event horizon. You see that right here? Let me get this guy's name out here. He's always shamelessly plugging his name. Look at that. Right there. and then ultimately getting down to my target. Watch right there. See that? There it is. Right below the relative equal lows. And then it runs aggressively lower, which is fine without me. It's okay. I don't know if the person that was posting to me on X was being funny or if he was making a comment that